I have been trading for 3 years, and 2 out of those 3 years I have been trading profitably. And a big chunk of this profitable trading was due to a strategy called hedging. But it is basically what hedge funds do. Massive billion-dollar hedge funds, they do something called hedging. And that is basically, instead of taking a stop loss, you take the other side of a position as your stop loss. Now, it is quite complicated, so I will get into examples later on in this video. First of all, I sound quite young, so how on earth do I know what I am doing? Well, to prove to you guys that I know what I'm doing, if we head down to my Discord server, link in the description, you go into the Ralph's trading column, which you can just join and have a look at. I have posted every trade I have ever taken live as they have happened, all my wins, all my losses, all my break-evens, everything there is to see here. I post them all live, and if you scroll down, you know and can see that I am a profitable trader. And if you scroll just up here, there is a funding certificate of $1,200 that I made just 2 months ago, okay? So I post my live trades in here, still do it now, will do it forever, link in description, okay? So, now you know I'm legit, let's get on to hedging. Hedging is basically when you take a long position and a short position at the same time, okay? So that is your long position, and that is your short position at the same time, okay? And it basically allows you to manage a trade just live as it happens, okay? So let's just use this example. This is just gold live right now. And let's say you found this resistance area this morning and you thought, okay, I am going to sell in this area here. So I'm going to take a short position there. And you thought, oh, okay, it hit my stop loss, okay? But instead of your stop loss, you would place a buy position at your stop loss. So to make it easier, let's use these arrows to indicate our position. So we found a resistance zone and we went short here, okay? So you went short at this level because you saw this wick and thought it would be a good sell. But, however, price just didn't do that, and instead, price broke the level and created a breakout, and you're now in a losing position. Okay, your stop loss would probably be around this zone up here, around the resistance zone. But instead of placing a stop loss, what you can do instead is you can place a long position, okay? So let's say this was one lot, the sell was one lot, now you're in a one lot buy. So this little portion of entry here, this little area in between, is now locked in as your loss, okay? So let's say you lost $50, you would have locked in $50. But what this allows you to do is, let's say, okay, you can just watch price, and as it starts to come down, you can get out of your position, or you can close the loss and then get into the long, and the long can actually make lots of money. So it's basically just being in two opposite positions at the same time. And I will show a backtesting software, for example, right now to prove this to you. So we head over to a random date generator. This is to show that I'm doing this legit. I don't have pre-planned markets, okay? And let's see what date we're going for. Okay, we're going from June 13th, 2023. So we go here, we go to June 2023 on my backtesting software. I did a full walkthrough. What is it? June 13th. So there, and we'll just do end date as now, and we'll start, okay? So let's enter this backtesting software, and let's give hedging a go. So I'm gonna be doing this on the 1 hour time frame, just because it's a good time frame for hedging, and also hedging is kind of useful on higher time frames instead of lower time frames, because it really just holds more weight. Support and resistance zones are better. So we're doing this on gold as well, because everyone loves gold. First of all, let's draw a support area and a resistance area above and below price. So we have a resistance area there, and we have a clear support zone in this area. So I'll sell here and buy here, okay? No massive analysis, just doing what the market is showing me, okay? So let's go ahead, a candle, and you see it kind of just staying still. Let's see if it gets deeper into this zone. I'll just buy if it gets deeper into the zone. Let's just let it run for a bit. And okay, so let's go for a long position here, okay? So we'll use these arrow candles as a long position. So we're in a long position, okay? Now our stop loss will probably be around this area, just below the zone. If it breaks out the zone, I'll probably go for a stop loss. So let's just see what this trade does. Okay, heads up, and okay, and has gone up. Our take profit is just gonna be in the resistance area. So not actually got into hedging yet. This is pretty much a good trade, and we've closed the trade at resistance. So we've also sold at the same time. So we're selling at the resistance we just got out of our position. Okay, so now we sold. Waiting for this good to go down, 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 down. Does it hit our take profit in the support area? Yes, it does. So we close that here. So far, we've got 2 winning trades just by buying a support and selling resistance, okay? So what we're going to do, we're going to buy at support. So let's get our green candle up here, green candle, and let's see what happens. Does price continue to go up, or does it break the level? Okay, so price broke through the level and stopped us out. So we now have a losing trade, okay? So we're going to keep in the buy, but now we're going to sell at this level, okay? So now we sold at this level. So we're now in a sell and a long at the same time. Let's see what price does. So price did retrace back in the zone. So I'm going to close the buy at break even. So now we're still in a sell, okay? So now we're in a losing sell position. Wait for his price to go down. And you see price is currently in profit. And if we look left, I'll probably aim to get out about this zone down here, okay? As our next zone. Oh, didn't mean to do that. So let's just have a look at what price is doing now. Let it run, let it run, let it run. If price breaks above this zone, I will get out, or I'll hedge. And it's still going sideways, not doing anything. We're still in the sell. Does it get to our take profit below? Does it? Does it? Does it? Yes, it does. Okay, this is just very simple. Okay, we bought at this zone here, but we lost the trade. Okay, this was a losing trade. But instead of just taking an L, just letting it hit our stop loss, what we did instead was we took a short position and long position at the same time. Okay, so we got stopped out here, but instead of putting a stop loss, we used a sell position. After price went to our imaginary stop loss, it then pulled back up to a retest. At this point, we got out of our buy at break even because now it's going down, but we're staying in our sell, and now our sell hit take profit. So we had a losing trade that just became a profitable trade just by using hedging. So if we look at all of our trades so far, we've had a win, a break even, and a win. So we haven't lost a trade yet, even though if we were trading normally, this trade would have been a loss. It is just, it's really something. So now we're going to buy at this support area, okay? And all we're doing is we're just using support and resistance. We're just drawing a box and waiting for price to get there. So we've gone long. Our take profit will be up there in this zone. So what does price do? Does it go up? I kind of want to lose this trade just so I can have a better example. Does it hit our take profit? Does it push up a little bit higher? And we'll take profit just in the box up here. So another winning position. So we've gotten to this point, okay? And let's just have a quick sum of the trades that we took, okay? We took a buy, that one. We took a sell, that one. We took a buy, but that buy didn't work out, okay? But we then took a sell after. We got out the buy at break even. We won the sell, and then we won the buy, okay? Just using hedging, we managed to win 1, 2, 3, 4 trades and have 1 break even, okay? So what we just did is we had 4 wins and 1 break even, okay? 1 BE. Even though we had a winning trade. If we traded normally, we would have had a losing trade, okay? But the power of hedging was actually a winning trade, even though it should have been a loss. And that is the power of hedging. You can turn your losses into wins. You can correct your losses, okay? But there are some limitations. Sometimes you can go into big drawdown, which means you don't want to use this on a funded account, okay? If you use this on a funded account, the drawdown limits are so tight, like 3% daily loss, 5% daily loss, that hedging usually requires you to go in 10, 15, 20% drawdown. And if you're not comfortable with that, then stick to normal trading, okay? Hedging is not for you. And I would not recommend this on a funded account. But if you have personal capital or you're on a demo, I highly, highly recommend you test this out for yourself, okay? It's all about practice. Go on a backtesting software. I'll leave a full link in the, I'll leave a card in the top right-hand corner on this backtesting software, my full guide on how you use it. So just click on the card in the top right and you can use this for completely free, okay? Just like I am right now. But this is how you do it, okay? It's very simple. Just practice and practice and practice. So I hope you guys have learned a lot from this video. Join my Discord, a link in the description, to see all the trades I take. We're nearly at 500 members, active Discord, and I'll see you guys all very, very soon. Peace.